save money just by switching where you bank. As I said, a lot of you probably do have checking accounts or some form of credit, but what if you can keep your money safe and receive interest on it without having to be charged a monthly fee? Today I'm going to open your eyes about the options of credit union. Now today I'm going to define what a credit union is, what is similar between them and banks, what is different, and there are some slight inconveniences. Now first I want to define what a credit union is. According to the California Credit Union League, they are not-for-profit financial institutions that can provide financial services. Now, credit unions are owned by its members, so if you're a member of the bank, you are a part owner of it. Banks, on the other hand, are owned by CEOs and their stockholders. To become a member, it can be based on your residency, so like whether you live in a certain city, some of it is just by county. You can also be based on where you work. So for example, I work at a school district, and because I work for that school district, I'm able to go into the credit union that I'm a member of. It can also be based on social organizations and schools. For example, Cal State LA actually has their own credit union that's just for Cal State LA members, students. According to the National Credit Union Administration, there's over 80 million Americans that are members of credit unions, which comes up to be about 23% of the total population. Now, to get to some of those similarities between banks and credit unions is, according to smarterchoice.org, which is a government website ran to inform people about what credit unions actually are. They offer most of your online and mobile banking. So you have your bill pay, you have your internet pay, you can do your online paperless statements, and you can also get notifications whether if you have like a low balance threshold, or even if you have like a bill that's coming up, they can send you a reminder to tell you you need to pay this. And there's also, according to the California Credit Union League, there's over 500 credit unions in California alone. Those are just types of credit unions. And then there's also shared branches. And in Southern California alone, there are 68 shared branches of credit unions. And there's over 500 ATMs that you could also use. And those ATMs include Costco, 7-Eleven, and on your debit card that they give you, there's the logos on it. As long as that logo's on the card, you can go to that, you can use that ATM to do your transactions. The only thing is the bank, if it's out of bank and you see the logo, the bank may charge you, but you won't be charged by the credit union. And according to the National Credit Union Administration, which is a government agency that does insurance, you are insured up to $250,000 on your account, which is basically the FDIC. It's the same thing, it's just credit unions over banks. Now, some of the differences between credit unions and banks, as I said before, credit unions are owned by members, not CEOs and stockholders. And so since they're owned by the members get to vote for who the board of directors are, which is your decision makers. So if you don't like what they're doing, if you don't like the increase in fees, you can talk to the board of directors and they'll see what they can do. At a bank, if you don't like the fees that they're charging you, too bad, they'll tell you to leave. And also because they're owned by the board of directors, which is a volunteer-based agency, they're not being paid anything. So since you're not having to pay them, they're able to offer a higher percentage rate on your savings accounts, as well as lower rates on your loans. For example, at the credit union that I belong to, which is the Credit Union of Southern California, they will give me 0.25% of what's in my savings account per year, whereas compared to a Bank of America, I didn't get anything because I didn't make the minimum. You have to have a minimum balance in your account in order to get a percentage rate. You can have $1 in your account and you'll still get the 0.25% rate back. invest in their community by offering competitive loans that can stimulate the economy. By that, it basically is saying they offer lower rates on their credit cards and their loans, so that way you have more money to spend rather than paying your Bank of America 29% credit card. At the credit union, it's 3%. So you're saving a lot of money just by switching where you bank. Now, as I said, there are some slight inconveniences of being a member of a credit union. They are strict on their membership, only because they don't want to get so large like a bank. And so sometimes they can say, you're just outside of the county line, so they won't accept you. But you can just keep searching. There is one that you should be able to be a member of. Another inconvenience is, which I didn't find this out until recently, you can't do deposits at your ATM. I was a member of Bank of America for 6 years, and going to the ATM to do all my transactions was very convenient because you didn't have to wait in line. You didn't have to rely on someone typing in the wrong number and it was deposited into the wrong account. Whereas at the credit union, you have to walk inside. You have to physically face a person, a teller, and they will know your name, they know your face. They're not going to mistake anything. They know me. My name is Deanna. They know what I look like. If someone walks in and says, I want to deposit this into Deanna's account, well, who are you? We don't know you. It's more of a personal type with the teller, whereas at a bank, it's swipe your card. They don't ask anything else. Now, another inconvenience that they also have is that they have limits on their credit cards. So, which means instead of at Bank of America getting a $7,000 credit limit, you get a $2,000 credit limit. I don't need $7,000, but you never know when you might need it. In conclusion, now that you are a little more aware of what a credit union is and what it can do, remember that they are not for everyone. Some people cannot get over those minor inconveniences. But if you can, you will be happier and have extra money in your pocket.
Josh, you here?
Yep.
What did you think?
I think she structured it pretty well. She used her citations really good. Defined a lot of the strengths for us. She had really good contact with the audience. There was like a few items I noticed. The other ones, it was pretty solid.
All right, at first I thought it was a little problematic because it sounds, the way you've set it up at the beginning of the speech, it sounds like an informative presentation. In the body of the speech, though, I do think you do make some pretty good comparisons that put it on the brink of being more persuasive. And at the end, you do end up with a much clearer persuasive appeal. And I think that that gets you over that hump a little bit. Organizationally, it's easy to follow. The structure is fine. You've got basic factual data that you're presenting here. It would be interesting to know the satisfaction level of people who bank at the different places. You've got your personal experience to talk about, but I'm not sure that your experience is always going to be generalizable. You mentioned some minor issues that might be different. I'm thinking about the percentage rate that you're getting paid, and I'm going, well, so you get nothing at the Bank of America, and you get next to nothing at the credit union. I mean, it's, how significant is that? Yeah, it would seem like you'd have to find something, I think, a little bit stronger on that. I thought that the stronger argument was the potential savings because you're not paying for fees and user fees and those kinds of things, and I think that that's the direction to go. And you could use maybe a couple of hypotheticals about how much a person could save in a year, for instance, by not having to pay those monthly fees or having to pay user fees.